Your friend in Central Illinois. WHOW.
Top of the morning. Thanks for being with us. I'm your host today, Seth Lawrence. The WHOW Morning Show streams to Facebook and YouTube, brought to you by Peterson Insurance, your Pekin Insurance agent in Clinton. My guest on the in studio this morning, I should say, is Connie Unruh with DeWitt Savings Bank. Good to see you, Connie. How are you today?
I'm good.
Thanks for coming out and talking with us as always. And April is Financial Literacy Month, and we've got some really good stuff to get to, from budgeting to kids, teaching kids about financial literacy, all the things. Is there a theme for you? Is there a national theme for Financial Literacy Month? Anything like that?
Yeah, there's not necessarily a theme, but one of the things that we're looking at is teaching your family early, and just being a role model for your kids. And that doesn't mean that you're perfect or anything like that, but learning some of these ideas yourself and sharing them with your kids.
Sure. Very good. Very good. So when it comes to Financial Literacy Month, let's start with kids. Because I think for a lot of folks, if they don't budget now, or they started budgeting later in life, probably the thought was, man, I wish I would have known this when I was younger. I wish I would have been taught this when I was younger. And I will say, as someone who went through the K-12 education system in Illinois, I did not feel like they did a good job preparing us for budgeting after high school and into, when you have to manage your own finances and all those things, and you learn some tough lessons along the way when that happens. So let's talk about, where do we start with our kids? What are some basic things we can be doing this month and going forward to teach them about managing their money?
Well, Seth, you brought up a good point. So many people tell me, oh, I didn't learn this in school. And unfortunately, in America, it's not top priority, financial literacy education in schools. There's an organization, it's called NGPF, Next Gen Personal Finance, and their goal is by 2030 to have financial literacy standalone classes, semester at least, in every high school in America. Right now, 30 states require that. Illinois does not. Theirs is a quarter-long program, and it can be standalone or included in other curriculum. They count AP Econ as covering that for them in Illinois. Our standards are much below other state standards. So that's first and foremost. It would be really nice to see that program improved.
Sure.
But another thing is that, you have Con Ed here at the high school, and it's a great program and they learn a lot, but it's not applicable to where they are at the time. So if you're learning about mortgages when you're 16, 17 years old, that might go in one ear, out the other, because you're not buying a house.
Yeah, that's way down the road for a lot of kids that age.
So what works the best we've seen is working with your kids yourselves. So that means you need to be on a budget. You should be looking at how much money is coming in and what's going out every month. And your kids can be aware of that too. I'm not saying you have to share all your anxiety and worries, but for them to see you saying, well, let's check the budget. If maybe we can do that. If we can't do it this month, maybe we can save money for doing that later. Like, let's say they want to go to Six Flags. That could be your goal. And how can we move money around, cut here and there to save up for it? Like when I was a kid, my parents did not make a lot of money, but we had a plan. We wanted to go, I think it was Great America up north
in Chicago.
Yeah. So my parents would say things like, well, we can go out to dinner, or we could eat at home and save that money to go for that long weekend. And you know what, for them to learn opportunity costs, that you can't have everything that you want, is really important.
Yep, those are tough lessons to learn. Sure. And for a lot of let's say that like 8 to 13, 14 range ish, a lot of those kids probably aren't working, making money enough to manage. Like, they may get an allowance at home for chores and those sorts of things. And that's probably a good place to start is, okay, we're going to, if you're religious, you tithe, and then you save, and then you have some to spend and all of that. But for maybe that younger child, where do the lessons start? You mentioned like maybe showing them the opportunity costs and where to scale back. What are other lessons we can teach them?
Well, like I said before, if you have a budget and you work with your kids, this is how much we have and this is where it's going. So they understand that, yeah, I know you want to get a new outfit, or you want to do this or that, or you want that big birthday party, but these are expenses. This is how much money's coming in, and this is where the money's going. To start with that is really helpful. But also, like you said, if they have an allowance or they earn money on their own, that's a great way to, have your kid mow lawns or shovel sidewalks, take care of a neighbor's pet is a great, let them out after school or something like that.
Babysitting.
And then they have their own money to be in charge of, and help them put a budget together for things they might be like. If they say, hey, I really want a new pair of rollerblades or wheelies or something like that, they can help do the research. How much do they cost? How can we get the money to buy these wheelies? And that might be even helping you with chores around the house. And then they can save their money themselves. They could have a student savings account. We offer those at the bank.
Right.
Or they could have a green light card or something like that. That I will say, though, with the cards, the debit cards, they're very convenient, but they're not touching the money. And it makes a difference.
Sure. Yep. Very good. Very good. So a lot of good lessons for the kids. And then, of course, you get into high school and all those things, and kids start to work and they start to earn a little bit more, and that paycheck gets a little bit bigger, and that maybe that disposable income gets a little greater. What are some lessons as the kids get older? And like I said, that dollar that's coming in is a little bit bigger. How about that?
Yeah, that's a really good question. I'm sure we've all been there, and we've seen people when they got into high school, all of a sudden they're working at Dairy Queen and they have a lot of money. And then they blow all that money. They're going out to eat with friends, buying new clothes, doing all that. So to have those discussions before they start and putting a plan together, understanding that they're under your roof, first of all, you help make those plans, whether it's schedules. Sometimes the kids will work themselves to death and work really late. So you have those discussions with them. This is when you can work, when you can't. You have other priorities, and make sure that their grades are staying up if they're going to work. But then from there, put a budget together with them. This much is for tithing, this much is for saving. But something we as Americans really fail to do is talk about, what are you going to do after high school and how are we going to pay for it? And that's a huge,
like, you mean college or
college, trade school, whatever you choose to do. We're seeing more and more kids going into the trades than they were in the past few years. A lot of times that's they'll get paid. They don't have to pay for their education. And that's a lot of money for a young, 20-year-old to have. So working on a budget with them, I see so many young men who are 20, 21, and they have a $900 car payment.
Right. Yeah. They're driving around in these, big 4x4s that, with the nice wheels and everything, and the rims.
Their insurance is almost as much as their car payment.
Right.
So those are things to work with them on a budget. How much do we have to spend on a car? And start out small, because, we all know it. Cars, for the most part, depreciate. That means they're worth less. The second you buy that car, it's worth less. It is not an investment. And they have other things that they're not thinking about, like, hey, I might want to move out of my parents' house someday. So helping them put together a reasonable budget. Remember to save so that you always have an emergency fund as well.
Yep. Very good. Yeah, for sure. And you talk about the, thinking about things like a car payment. But coming with that is also insurance, whether that's a monthly insurance bill, whether that's, biannually or annually, whatever the case may be, however your insurance company does it, thinking about that. Thinking about the gas, putting gas in it. Gas lately is very expensive. Like, there are, and it's not just cars. It's other things that you buy as well. There are responsibilities there are costs that come with these things that we're buying for ourselves. So.
Absolutely. The cost of maintaining them.
Right. Yeah.
So when you're putting your budget together, those are things you have to look at. I can't tell you how many people tell me, after they bought a very expensive car, oh my gosh, the insurance is so high on this. Well, you know what? A 19-year-old young man buying a truck or a Charger, their insurance is going to be through the roof. So those are things to research before you buy the car and make sure that you can afford the whole package.
No doubt. No
Yeah,
question.
and something else we didn't mention is deductible. We just had tornadoes rip through here last weekend, right? You know how many people I talked to who lost windshields and windows and things like that? And so to be able to have the money if you need to pay a deductible or, you have glass breakage, you have to pay it out of pocket if your insurance company doesn't pay for it. Those are things we need to be prepared for.
Yeah, for sure. That's where that emergency fund probably comes into play at some level.
Absolutely, because you don't want to have to use your credit card and to pay for things that are truly an emergency.
Sure. Well, and I tell you what, on that note, Connie, let's go ahead and take a break. And when we come back, we'll talk about maybe some basic things that everybody should be doing in terms of budgeting. You talked about an emergency fund. You talked about your vehicle. Like, we'll just talk about basic ways to budget, and that those can be lessons we pass along to our kids as well. In the meantime, how do folks get a hold of you at DeWitt Savings Bank if they want to talk budgeting or they've got a question about? I know we talk scams a lot. Maybe they got a question about scams. How do they get a hold of you?
Our number at the bank is 217-935-9470, and just ask for Connie.
Easy enough. Very good. Connie Miller, DeWitt Savings Bank, is my guest in studio this morning. More to come with Connie on the WHOW Morning Show.
WHOW.
Let's check the markets. Sunny RFD Radio Network. I'm DeLaw's Yankee. Mixed opening. Start a new week. We have wheat a little bit higher. Corn and soybeans are lower. May corn down 1.5, 447 1/4. July down 1 3/4, 455 3/4. December corn down 1 1/4, 475 3/4. May soybeans down 4 1/4, 1163. July down 4, 1179. November beans down 3, 1153 1/2. Soybean meal for May down 3 1/2, 328.40. Soybean oil for May up 2, 68.36. And soft wheat for May up 1/2, 591 3/4. Hard wheat up 3 1/4 at 640 with KC July up 3, 653. This is the RFD Radio Network.
Spring is in the air, so it's time to choose your new Silverado. This is Scott Baum from Baum Chevrolet Buick in Clinton and Farmer City. We have a good selection of new Silverados with springtime savings and special finance rates. Choose from regular cabs, double cabs, or crew cabs in gas or diesel. We're also allowing extra money for your trade on all new Silverados this month. Silverado. Together, let's drive. See all our inventory at BaumChevyBuick.com, right from the start.
Here's Matt Hart, owner of the Hart Media Group in Clinton, talking about continuing to serve the community through new ownership.
Things came together and we reached an agreement to purchase. And as you mentioned, we closed August the 1st. So as August the 1st, Miller Media Group is now Hart Media Group. And we're continuing to serve the people of Clinton and DeWitt County and Monticello and Bloomington and Decatur and everywhere, because we'll just keep connecting people as we've been doing.
The Hart Media Group looks forward to continuing to serve the community for years to come.
Your friend in Central Illinois, WHOW.
Once again, a good morning. Thanks for being with us. I'm your host today, Seth Lawrence. The WHOW Morning Show streams to Facebook and YouTube, brought to you by Peterson Insurance, your Pekin Insurance agent in Clinton. Connie Miller, DeWitt Savings Bank, is my guest in studio for today. Connie, we're talking budgets. We talked about just kind of passing along budgeting lessons to our kids. For a lot of things, that's where it starts, is we educate the younger people, so when they get to be our age, they're not making the same mistakes we did, right? Well, for people our age that may not do budgeting very well or very regularly, where do we start? How do we do this?
Well, first of all, I'd like to just tell listeners my own personal story. When I've budgeted, I have margin, I have peace, and I know where my money's going. This past year, I sort of kicked that to the wayside, had a lot going on, didn't do my budgeting. And I will tell you that I was shocked at what I was spending when I look back, and I didn't even realize it. And the only reason I noticed that I had a problem was because my savings was dwindling.
Mm-hmm.
So now our family's back on a budget
Mhm.
and we're saving a lot more money.
Mhm.
We're losing weight because we're not eating out as much,
Yeah,
things
sure.
like that.
Mhm.
Making and it's not like a budget has to be like a diet.
Mhm.
It is more of a plan for your money.
Right.
That's what you're doing. And it can actually be really helpful because I plan this much for eating out. Then you're not feeling guilty, because before I'd feel guilty every time we ate out.
Mhm.
But knowing we have like $400 this month to do fun things with, let's say, that's okay to go out to eat and you don't feel guilty then.
Sure. Yeah.
So I would just caution people to not take it as, oh, this is so hard and all that. And also it doesn't take a lot of time.
Mm-hmm.
I would do a budget every month,
Mhm.
and because things change each
Mhm.
month.
Mm-hmm.
But there are some things you have to look at. First of all, you look at how much you're spending,
Mm-hmm.
how much is or not how much you're spending, how much is coming in.
Mm-hmm.
You need to know where is the money coming from and list that. And that's what you work from.
Mhm.
And then you can put a skeleton budget together. Basically, like, this is about how much I need per month
Mhm.
for our house. And
Mhm.
you have to look at the four walls. So you need food, right? You need shelter,
Mhm.
you need to pay your utilities, and you
Mhm.
have to have a way to get to work. So
Mhm.
your transportation. Those are the four things.
Mhm.
So you list those. Those are your needs.
Mhm.
And food, of course, can be very variable. That's probably the one you can mess with the most,
Mhm. Mhm.
And I'm talking like food in your house.
Mhm.
Eating out is technically entertainment.
Mhm. Mhm.
All of us, I know I've said this before. You go through a drive-through. I went through Culver's one day. It took me a half an hour to get the food, and I thought I could have gone home and made food quicker than
Mhm.
it took me to sit in this drive-through
Mhm.
with my family.
Sure.
So think about that.
Mhm.
But also with that, there's ways to lower all of those expenses. Once you look at your budget, you see this is how much is coming in, this is what's going out, these are the things I need to have. Maybe there's some things we need to get rid of, like maybe some streaming services, or you have your kid in golf lessons and dance. Maybe, I know we all think that's really important, but most of our kids are not going to be pros at whatever sport they're in when they're 8. It's just how life is.
Right.
And then look at your budget. What can I take out? But also sometimes you get to the point where you're like, I have to trim even like my groceries.
Mhm.
Maybe going shopping at Aldi. Aldi's a huge difference between there and going to like Schnucks or one of the bigger grocery stores. We have a Save a Lot here in town,
Mhm.
or shopping. Kirby Foods has great sales.
Mhm.
That's a great way to make some changes too.
Mhm.
But plan ahead. Put a budget together, but also put a food plan together.
Mhm.
When are we going to be home? When can we cook meals? Can we cook on Monday and eat that on Tuesday because we're not going to be home?
Right.
To make dinner. Also, if you have kids in sports, bring a cooler, bring food with you. It's much healthier and it's so much cheaper than running into Casey's or using the concession stand
Right.
to feed your family.
Yeah. It's amazing how much more organized you become when you put a budget together, because like you said, then you start to meal plan, because you know what you're spending food on and for, and what you're going to do with it when, and those sorts of things. When you look at all the streaming services you are signed up for, you evaluate, are we really using all of these things? Are these necessary in our household, and those sorts of things? There's just so much more peace of mind that comes with and like you said, there's so much peace that comes with having a budget and not being stressed on, oh boy, are we going to make it to the next paycheck, and those sorts of things.
Yeah. And the thing is, if you have an emergency fund, like we talked about before, you use that for a deductible if you have an accident or something like that. But you have to have an emergency fund. So in the meantime, if you're strapped for cash, pay the minimums on all your credit cards and your loans and save. That may mean cutting some expenses or working a little extra. Maybe you can pick up some overtime at work or do some extra work for someone else to get enough money to have at least $1,000 savings in an account. Whatever your deductible is, like on your house or your car, or your car, I would recommend you have that in savings just in case. Then you never have to use a credit card.
Sure. And for I've come across this a couple of times, Connie, where we have an emergency fund, right? And like, I'll give an example. I took Jessica's car to get the oil changed, and they said, yeah, you're going to need brakes and rotors coming up. And so that on top of I need a new fan for my furnace, and a couple of these things really kind of added up quick, right? And so I was thinking, do I want to dip into my emergency fund for any of this? Can my budget sustain these expenses? It'll be tight, but I can make it to the next month, not have to dip into that emergency fund. Where do you draw the line on what's an emergency in your house?
That's a really good question. Now, in that case, let's say you weren't able to save enough
Yeah.
and it became a necessity, like the
Mhm.
fan or something like that. Then you can dip into your emergency fund and be happy you have it
Mhm.
for those cases, and then replenish it. But remember, there are routine maintenance is a thing you're going to always have on your car. Maybe it's a line item where you put a little extra to the side, so we're every other year we put tires on one of our cars,
Mhm.
or like the rotors and things like that, and just put like $50 away. But let's say you get to the point you go to get the rotors and it's $600 and you only have 500, then you have that emergency fund for a reason. So you can either be bummed that you had to dip in the emergency fund,
Mhm.
or think, oh, I'm so happy I have this money. I don't have to put it on a credit card.
Mhm.
I can just pay it, and then I can replenish that fund.
Yeah, a lot of people in debt these days. Very quickly, I've got about a minute. Talk to us about paying down debt. How do we approach that?
I recommend the snowball method, and that's you list your debts smallest to largest, and you pay minimum balances after you have your emergency fund towards your debt. Then you put all your extra cash on the smallest debt. Once that's paid off, all your extra cash goes to the next debt, and it works. I've been teaching this for almost 30 years, and it really does work.
There's a guy named Dave Ramsey that made that
Oh,
famous.
yeah,
Sure.
yeah,
So
yeah.
very good. Well, on that note, Connie, one more time, there's so much more we can go into with Financial Literacy Month, from investing and all those things. If somebody wants to maybe sit down with you and just talk about where they're at in their financial life, how do they get a hold of you?
Well, yeah, if anybody has a question about their finances or would like some help with budgeting, I'm super happy to help them. The number at the bank is 217-935-9470.
Mhm.
And also I did put together a family fun pack. If anybody would like some stuff to do with kids,
Sure.
they can get that from me too.
Very good. Connie Miller, DeWitt Savings Bank, my guest in studio. Network news on the way.
The Big 1520, WHOW Clinton, along with 92.